Okay, now let us move on to section 32, subsection 1, clause 2a, which is nothing but additional depreciation. Let us see. Okay, section 32, subsection 1, clause 2a. What does this section speaking about? This section is speaking about something called as additional depreciation. Additional depreciation. What is the meaning of that? Additional depreciation. The meaning of additional depreciation is along with the normal depreciation which you are taking on the WDV, in addition to that you can take some other depreciation provided some sort of conditions apply. That means if you satisfy the following conditions, if the following conditions are complied, then you can take some additional depreciation. That's what is the thing which is mentioned under section 32 subsection 1 clause 2a. Now let us quickly try to understand what are the conditions which you are supposed to comply. If you comply these conditions, then you can take something called as additional depreciation. Let us see condition number 1. What is the first condition? Basically the first condition is nothing but applicability. Okay, to whom additional depreciation is applicable. So that's what is something called as applicability. Let us write it as applicability. Okay, applicability. To whom this is applicable? This additional depreciation is applicable first of all for a manufacturing undertaking. The word which you are using is nothing but manufacturing undertaking. What is the meaning of this? Manufacturing undertaking. Okay, manufacturing undertaking here means that you can be a individual, you can be a HUF, you can be a firm, you can be anything, but what you are doing something called as manufacturing. So any person who is called as manufacturing undertaking, to them this section is applicable. Along with the manufacturing undertaking, this section is also applicable for whom? This section is also applicable for those undertakings, okay, undertakings engaged in generation or distribution. Okay, so what you are doing, you are engaged in generation or you are engaged in distribution. Engaged in generation or engaged in distribution. Distribution of what? Engaged in generation or distribution of power. Then to those people this additional depreciation will be applicable if further conditions are satisfied. That means not only one condition, you are supposed to satisfy the other conditions also. That's the reason we are using the word and. That means first condition is what? You should be someone doing a manufacture, or you should be someone engaged in generation or distribution of electricity. Then you need to go to the second condition. What the second condition says? Second condition says that you should acquire. Acquisition. Okay. Second condition says that acquisition of an eligible asset. Now, acquisition of something called as eligible asset. So any person who is engaged in acquisition of eligible asset is something called as an is the second condition which you are supposed to satisfy. Again, you are doing manufacture, you are engaged in generation and distribution of electricity, and you had acquired something called as an eligible asset. If these conditions are satisfied, then you can take the deduction under this section. Okay. Now, to complete this, we need to understand something. What is the meaning of eligible asset? Let us try to understand the meaning of eligible asset. What is called as eligible asset? Let us try to understand. So the eligible asset definition here is given in a different way. What it says that, okay, let me, eligible asset, the definition says any asset, any asset other than any asset other than the following. Any asset other than the following is called as eligible asset. Any asset other than the following assets are said to be called as an eligible asset. Now, what are those? Let us try to see what is the list. That means these assets are not other than this, remaining all assets are eligible. That means whatever assets which you are discussing are said to be called as ineligible assets. So in short, I can write this: we are discussing something called as ineligible assets. So these assets are ineligible. Other than these assets, remaining all assets are eligible. Now, what is the first one there? The first one there says that any sort of old or second hand asset. So if you are having any old or any second hand asset, that is not said to be called as an eligible. And it clearly says that, and it also says that any sort of ships, any sort of ships, any sort of aircrafts are also not eligible. So any sort of old or second hand assets are not eligible asset. Any sort of ships or aircraft is also not an eligible asset. It also says any sort of assets, any sort of assets used where in office or guest house. So any sort of assets used in office or guest house is also not said to be called as your eligible asset. So the thing is what? It should not be old, it should not be second hand asset, it should not be ships, it should not be aircrafts. It should not be the asset used in guest house. So all these assets are said to be called as ineligible. Other than this, whatever asset you acquire, that will be said to be called as the eligible asset. Now the next point also says that any asset, okay, any asset, it could be any asset, any asset allowed as deduction, any asset allowed as deduction under any provisions of income tax act, any provision of income tax act, okay, any asset allowed as deduction under any provisions of income tax act is also called as ineligible asset. And finally, the last ineligible asset is going to be any sort of road transport vehicle. Road transport vehicle. So anything which is called as a road transport vehicle is also said to be called as a ineligible asset. Now we have discussed the list of assets which are said to be called as ineligible. Now let us try to interpret this another way and try to understand eligible asset. Now, based upon the above definition, I can mention what assets are called as eligible assets. What assets are called as eligible asset? In one line, I can call any new asset, okay, any new asset used for manufacture, any new asset which is used for manufacture, okay, and not allowed as deduction, not allowed as deduction under any provision of income tax act. So any asset used for manufacture, of course manufacture here includes generation and distribution of electricity as well, so it should be a new asset. That's what the first point says. First point clearly mentioned any asset which is old. Now if I try to interpret here this definition, any asset which is a new asset, that's what we had written. Means what? Why? Because old and second hand asset are not eligible, so that's the reason it should be a new asset. And it is mentioned that ships and aircrafts are not used in manufacture, assets used in office means what? Even these assets are not used for manufacture. Say air conditioner installed in office is not used for manufacture. Same air conditioner installed in factory used for manufacture. So any asset used in manufacture or generation of electricity, provided that is a new asset which is not allowed as deduction under any other provisions of the Income Tax Act. Of course, road transport vehicle is not at all used for your manufacture. Once the goods are manufactured, this vehicle is used to transport the goods. So ultimately, road transport vehicle is not used in manufacture. So any assets which is new used in manufacture is something called as an eligible asset. So again, additional depreciation concept is very simple. What the first point says here, applicable for any entity engaged in manufacture or engaged in generation or distribution of electricity or power, and it should acquire an eligible asset. We know the meaning of an eligible asset. Then what? Then the third point. Then the third point speaks about the amount of deduction. Amount of additional depreciation which can be allowed as deduction. Amount of additional depreciation which can be allowed as deduction. So amount of additional depreciation which you can take that as a deduction. Now let us see. Here also, whatever asset you are acquiring, see whatever eligible asset acquired, okay, that eligible asset acquired should be put to use for a period of more than 180. So here, let us write two things. Eligible asset acquired, eligible asset acquired during the previous year. Eligible asset acquired during the previous year. Let us say acquired during previous year. Put to use. What we have to do should be put to use. Okay, you should put to use that asset for what? For 180 days or more, or simply speaking, I can call that as what? Greater than or equal to 180 days. So any asset put to use for a period of greater than or equal to 180 days, then the rate of depreciation is different. In this case, let us see what is the rate of depreciation. What is the rate of depreciation here? The additional depreciation is nothing but 20% on actual cost. 20% on actual cost is nothing but your additional depreciation. So the amount you can take here is what? 20% on the actual cost. If you had purchased an eligible asset during the previous year and actual cost of the asset, say for example is 10 lakhs, on the 10 lakhs 20%, 2 lakhs is the amount of additional depreciation you can claim. So here the important thing you should note is what? To claim additional depreciation every year, you should acquire an eligible asset. If you acquire eligible asset every year, then only you can take the additional depreciation. It's not like your normal depreciation. Normal depreciation, once the asset is purchased, every year till the WDV becomes zero or till the block does not